I'm pleased to say that Pivotal's Brian Weezer joins us now over the phone from New York. Brian, it would be rude of me not to allow you to have a victory lap, so take it away.
Oh, well, thank you for having me. Occasionally get a call, right? But that said, I mean, this is only part of a bigger story that hasn't fully played out yet, right? I think that the fact that they missed on this particular quarter, and only slightly, was not the big problem. It was the timing, of course, of announcing the shortfall that relative to expectations for the next couple of quarters and implications for beyond. I don't want to pretend to be the person who said that it would happen this quarter specifically, because I think that's impossible to have anticipated in advance. But that said, I think that I think the market will eventually come around more fully, even from where it is now, to a view that says that expectations are probably still a little too robust going forward. And we haven't even really hit on the broader, managerial problems that the company has, let alone the FTC fines they'll probably experience, further fallout that could still come from Cambridge Analytica, fines from GDPR, a whole host of other issues. So, no, we're not quite all the way there yet.
Well, Brian, you've been incredibly realistic over the last couple of months, and you've stated the case again and again, especially to me on this programme. We thanked you for your time. You've said that we're approaching a point of saturation. There are still a lot of analysts out there trying to get their head around the growth deceleration. Just explain to them what you think they're missing.
Yeah, I think the reality is that the overall advertising industry has not meaningfully changed its growth trajectory relative to economic growth in recent years relative to prior years, despite the fact that digital advertising is around 40% or so of total advertising. If digital advertising could cause some kind of change in the trajectory of the overall advertising market, you would have seen a difference by now. And the fact that we haven't means that for anyone to say that digital can cause money to come from non-media marketing budgets and go into marketing, causing some kind of massive opportunity expansion, the data just doesn't say it's there. You have to be willfully optimistic. And I think that is, what a lot of the investment communities have missed. I think that they've looked at growth as relatively infinite, or maybe taken another way. If a seller of media says that their advertising outperforms others and can produce high ROI, therefore ad budgets can be effectively unlimited, which is ludicrous. But that is a common view, I think.
Brian, I do want to get a final word from you on quite an important question to a lot of people on the street. It's how the C-suite got communications this bad and how the market got it this wrong, and whether this could be happening elsewhere as well. It's very rare to see a company this large gap lower by around about 20% without a crisis, without a catastrophe, just on some bad earnings guidance. What do you make of that? Just the concept of that, gapping this much lower on very little, Brian.
Yeah, I agree. And, actually some of us are dealing with Nielsen going through the same or similar, if not worse, circumstances this morning. So I think, that is a little bit surprising when that happens. Now, I guess in Facebook's case, it's not like they typically telegraph these sorts of things going, ahead of the quarter when they provide guidance. So, I guess it's not overly shocking that it played out this way for Facebook.